Okay, good day everyone. It's Total Investor here, everyone's favorite YouTube investment channel. Today we will be reviewing commodities, specifically half a dozen of them that I feel have a tradable pattern. The first one that we'll be reviewing is on the T-bonds. Okay, now back the last time we spoke about this was back on, let's see what I got here in the notes, was June the 13th, when it just broke out of the pattern and it was a buy. Now, rather than looking at only the bonds futures themselves, I also looked at the TLT, which is an ETF for the Treasury bonds. And that was what I thought was a buy, and it has been going up since that time. So it's been roughly a month. It has performed as I had expected. There was a little bit of money that was made, and again, you could have also made money on the bond futures as well. But nothing has really changed in terms of the price pattern. It is still bullish. It became bullish a little bit earlier with using just these patterns, the 9-day and the 18-day moving averages. When they crossed here, it was a buy, and it's been a buy ever since. That would have given us about, about 6 points on the bond futures. That would represent about $6,000. A very nice return for about a month and a half trade. Again, everything still looks bullish as is. And again, it's similar with the TLT, the bond ETF. Okay. Next, we will take a look at coffee. Coffee, if we look at, it bottomed out here in April at around 124, rose all the way up to above 168. That is a phenomenal return for a 2-month trade if you got in. Since then, it has pulled back to the 148 to about half of the move. So that gave us a Fibonacci retracement of 50%, which is a good signal to say, okay, we've got enough of a pullback, and maybe we've got a chance to another upward move here. So that's one way of looking at or one reason to get in now. The other one is that we also see that the 158 area, okay, has provided support and resistance. First level of resistance was here. It broke through, then came back as support. Now I say 148 area because it actually is between 150 and 146 here, okay? But I'm going to use the 148 area to be, well, just to give you a dollar amount, but it's really 150, 146 area. So it provided support here. Once it broke through, it came back as support again, 148 and 148 again, okay? So strong support here. It should give us a little bit of, it should lower our risk in terms of on the downside compared to where this thing could potentially go. Another way of looking at this as a trade is the moving averages here. The 9-day exponential moving average and the 4-day exponential moving average have crossed. The price is above that, and if you can see, that is actually done quite well in the past. It gave us this buy signal that lasted all the way through, pulled back, and then even at the second time here. So today we got that buy signal. If this turns out to be a continuation pattern of this initial bull move from here to here, we see that from 124, 168, we're talking about a move of, 44 points. So what is the target based on this move? Well, we would add those 44 points to 148. So we'd be talking about, 192? I hope if my math is correct. That's usually late in the day. But that would be a nice move if it can get there. Now, does it have to get there? No, it is just a target based on this price pattern. That's it. If all the other indicators look like it's time to sell and you got to get out, well, you get out. You don't wait until to see if it actually gets there. But if it does, that would be a very nice profit to be made. Something to consider. Next is the US dollar. This is very important because it's related to a lot of commodities and, well, just everything right across the board, even stocks. What we have seen, this is I'm using the 18-day simple and 9-day simple. Again, when these cross, it's bullish. Here, when they cross downwards, it's bearish, bullish here. Now we see we might be getting ready for the moving averages to cross on the downside. Not there yet, but it could be. Now, this is forming unfortunately, I don't have the RSI here as I normally do on other charts. The RSI is actually moving down, still in positive, but moving downwards. And look at the price of the underlying. It's actually up, making higher highs. However, the RSI is not. That is a bearish divergence. Okay, it's a strong warning signal. If we ignore that, we also see, like if we were to draw a line from here through here, and on the bottom of this, from here through here, it will actually form an ascending triangle or a bearish wedge, simply depending on, you can call it either way. Regardless, it is also a bearish pattern. Okay, so as this stands right now, it's still bullish. However, there are big major warning signs for the US dollar index, and we could see this moving downwards over the next couple of weeks. So pay attention, okay? And it also means a lot to all the other currencies, because if you're looking at the Canadian dollar, the euro, the pound, the yen, everything, those currencies will be in the reverse. Okay, so if the US dollar is bearish, then the majority of those other foreign currencies would be considered bullish. However, it's not guaranteed because they will all have their own unique patterns. Okay, so and also look at precious metals. If the US dollar is looking bearish, then we might have a reason to be bullish on gold and silver. Okay, so something to think about. So put this on your watch list. And finally, we have lumber. Now, I recall there were two videos that I spoke about lumber. Okay, the first one was way back May the 11th, way back here. And I thought, I've got to make a video on this particular day, and I did, right after the close. And I said, guys, pay attention here, because this is a bearish engulfing pattern. And I called it, and I said, this could be the top. Okay, what happened? It was the top, and it went straight down from there for several days, okay, until we found some kind of support. The next time, the next video that I spoke about lumber was June the 8th, back here. And I mentioned, well, we've got a floor temporarily, but this is a very weak commodity because the RSI had broken below 50. It was trading below the short-term moving average. The ADX had already broken down. That was bearish. And the DIs had crossed into negative. So everything was looking negative. And I said, once this thing breaks, we could be seeing much lower prices. And the figure that I gave, which sounded maybe a little too bearish at the time because everyone was thinking, no, house prices are gone up because of the price of lumber, and you can't find it at Home Depot. It's just too expensive. So everybody was bullish. And I came up with a figure of possibly 700, which I even surprised myself. I had to redo that over and over again, thinking maybe I'm just a little too bearish. Well, what happened? We hit 700 not just last week or just over a week ago. It bounced, hit it a second time, and yesterday and today we broke through 700. Okay, so even my bearish call wasn't quite bearish enough. Now, it did make the target, and of course, it doesn't mean that it can't extend beyond that, and that's exactly what happened. So as it stands right now, still bearish. Everything is, I don't see anything that would make this thing bounce other than it may have gone a little too far on the downside. But that in and of itself is not a good reason to be buying it. Okay. Regardless, those who listened to that call from way up at the top and were long saved themselves a lot of pain when this thing came down. If you had sold at the top, you made a killing. Okay, this is like almost 1,000 points here from where it is today. Congratulations if you took that. Now, the only way you would have probably taken that is if you, one, saw the video, and two, if you had subscribed, because how else would you have known if you weren't specifically looking for that? You want to subscribe to these videos. I do my best to put out information that is useful to a lot of people. It's unbiased information. Okay, I'm not selling anything. Okay, there's no membership here. I'm not holding a position in these, so it's not like there's a pump and dump. You can't do that with commodities, and I don't do that with stocks or with crypto either. Okay, it's just basically what I see on using the chart patterns. Okay, so if you took that, if you did something with it, congratulations. Please subscribe. All you got to do is go down below the video, red subscribe button, click it. YouTube will notify you. Okay, and if you like what I'm doing, give me a big thumbs up. Finally, one more where I think we've got a chance to make some money here based strictly on the chart pattern. Okay, if you see here, Rice has performed quite well just using these two indicators, the 4-day and 9-day exponential moving averages. It has pulled back, up, down. You got most of this upwards move, and you got most of this downward move. Okay, I know it doesn't sound like much. It's only like about 2 full cents both ways, but because with futures you're using very little margin, it does provide you with huge returns. Okay, and what do we have right now with the same pattern with the 4 and the 9-day? They're about to cross. It closed above it in terms of price. We could be seeing another bullish move upwards in the rough Rice. Okay, this is the September contract. Will it happen? I don't know. Sometimes, with these commodities, they're very low. They don't have a lot of volume, so they could be choppy. That is something to consider. But at least you should be keeping an eye open. Put it on your watch list. Okay, there's an opportunity there. So if you have any comments on these commodities that I've spoken to, other commodities that you want reviewed, stocks that you want to be reviewed using your chart patterns only, and for cryptos, down below in the comments section, and I'll do my best to help you out. Okay, and with that, I will see you in the next video. Thank you.